Good morning. You're watching The Market right here on ET Now with me, Aisha Faridi, Aman Dabash, Nikunj Dalmia in the studios. And for the market, the struggle and the churn continues, at least for the large caps. The buoyancy continues to be in the broader end of the market. But this morning, lots to digest, lots of news flow as well. The US CPI print is out, and you have seen a little bit of a very simmered reaction coming in from the US equity markets. Even though this data was much anticipated, you've seen just a very simmered move, 52 points higher for the Dow, absolutely flat for the S&P 500 index, and the Nasdaq as well, just about barely managing to hold on to the green. July's data for the CPI, remember, in the US has been cooler than expected, the consumer inflation reading that is. So yes, the global mood as well is pretty somber.
Somber is not the right word. I think, see, you are going through that phase of the market where news flow is entirely not bad. Macros, I would say at best, they are mixed. Even though the US CPI data is marginally better than what everybody was anticipating, even though we are talking about a high inflationary environment, it is not really having a large impact on the market per se. So the bond yields are at 4% plus, the volatility is going here and there. We are in a state of limbo. There is nothing which could generate upside momentum. There is nothing which could really generate downside momentum. What is pushing the market lower? Well, it is the fact that energy prices are going higher, the fact that valuations are looking slightly stretched. What is preventing the global markets from going down lower? Well, it is also a fact that right now there is immense and more liquidity which is there in the system. China seems to be making a comeback, and there is nothing big negative in the financial market. So if you have to take a cue from the global market, which you should, because large part of the rally in 2023 is also a function of global markets, well, globally it's status quo. And unlike what we thought, let's say 15 days ago, that the macro in the global markets was reversing, thankfully that has not translated into any ugly reality.
Okay, that's talking about the overall global setup, but let's also discuss how our markets shaped up. And well, range-bound was the word that you can use to describe it. 4 straight days on the trot that it's been a tight range for the index, and it seems like the bias now is shifting a bit downwards. Yes, you had the RBI that delivered on policy pretty much as what the street was penciling in, and that pulled the Nifty bank in below the 50 daily moving average. Second straight day on the trot that FIIs have remained buyers after a 9-day selling streak. And for the frontline indices, the Nifty bank, as we said, is below the 50 DMA. So Nikunj, is it a sense that in terms of levels to watch now that we are moving a bit with a downward bias?
So Avan, the downward bias I think was prominent. And the downward bias was prominent before the credit policy. And frankly, nothing has changed in the credit policy, or nothing negative has come in the credit policy which changes the near-term market direction.
Except the ICRR reaction that the market saw a knee-jerk move to.
That was a knee-jerk move. Yeah. I mean, I was scanning through some brokerage reports and I spoke to a few bankers yesterday. All of them are saying that this is more like a temporary phenomenon to suck out liquidity, which the big picture for banks does not change. The NIMS contraction here or there, that is something which markets, I think, will not really, should not really concern the market. The point you could ask yourself, Aisha, is that are we in this range with a downward bias, and how long we are likely to continue? I think it may just continue for some more while, which is that you may be trading with a downward bias, nothing scary, nothing alarming, it's not a crack, it is not a crash. But the zing in the market which you were getting on a daily basis, that clearly seems to be missing. And more markets will resign to a range. You actually will see that trading action in a sense will start getting limited and restricted. The number of stocks which are making a new high, the number of stocks which are chugging along in the mid and the small cap space, that momentum has not reversed, that seems to be tiring out. So I think we are going through that phase where some would say market bulls are getting tired, some would say they are resting, some would say that they are waiting for the next trigger, depending on your understanding. So let's look at the data. One data point which frankly matters to me is what is happening to Nifty futures. The premium. It was at 75 points, it's at 50 points now. The bank Nifty, the Nifty futures has not expanded. FI long short ratio, again, it seems to be indicating that FI is also restricting the long positions. So the institutional drive to buy into the market, at least at an index level, seems to be waning away. I think waning away is the right word.
Yeah. Well, talking about stocks and sectors, here's none other than the Prime Minister himself actually rooting for investment in PSUs. In fact, just yesterday, replying to the debate on no confidence motion in the Lok Sabha, the PM said in jest that stock market investors should invest in PSUs such as Hindustan Aeronautics as well as LIC, which were, remember, criticized by the opposition in the past.
आज HAL देश की आन बान शान बन के उठ रहा हूं। आदरणीय अध्यक्ष जी, जिसका बुरा चाहते हैं वो कैसे आगे बढ़ता है, मैं तीसरा उदाहरण देता हूं। आप जानते हैं एलआईसी के लिए क्या क्या कहा गया था? एलआईसी बर्बाद हो गई, गरीबों के पैसे डूब रहे हैं, गरीब कहां जाएगा, बेचारे ने बड़ी मेहनत से एलआईसी में पैसा डाला है। क्या कहें, जितनी उनकी कल्पना शक्ति थी, जितने उनके दरबारियों ने कागज पकड़ा दिए थे, सारे बोल लेते थे वो, सारे बोल लेते थे। लेकिन आज एलआईसी लगातार मजबूत हो रही है। शेयर मार्केट में रुचि रखने वाले को भी ये गुरु मंत्र है कि जो सरकारी कंपनियों के लोग गाली देना, आप उसमें दांव लगा दीजिए साहब, अच्छा ही होने वाला है।
Well, who better than the PM himself to pitch for, investing in PSUs? And specific names, mind you,
Yes,
LIC
yes.
and HAL.
Stock specific called by the Prime Minister.
Stock specific without a disclaimer or disclosure.
Look, the PSU comeback post-COVID has been the most underappreciated trade by the market. You've appreciated the comeback in manufacturing, you've appreciated the comeback in banks, you've appreciated the comeback in IT when it happened, but the comeback in some of the PSUs post-COVID, I think, is absolutely phenomenal. Take the clock back, and I'm going to take the clock back companies which existed and companies which currently are trading at a different level. BEL, BEML, Engineers India, Mazgaon Shipyard, look at where they were. Just look at BEML, BEL. Some by design, some by choice, and some by government policy. Design is that the framework has changed in terms of manufacturing. So whether it is defense or railways, the entire ecosystem has changed. Government has given them duty protection and the capex has started. That's the railways and the defense story for you. B, the compulsive selling by government, by the ETF route, by the OFS, that also has got arrested. So the supply now seems to be getting restricted. And third, in general, I think there seems to be a change in terms of the management approach, creating wealth. You speak to DIPAM now. DIPAM is no longer the divestment ministry. They are looking at creating value for PSUs. So I think this entire re-rating in PSUs, which was a bombed out, which was an ignored sector for the last decade, it's turning out to be the year of comeback for PSUs. This reminds me of a conversation I had with the late Rakesh Juniwal in 2000, and he said, look, I'm the biggest buyer in BEL, SCI, and some other government PSUs. So because he saw value in them. And a similar move has happened in some of the PSU stocks. Those who saw value in 2020, I think they've been rewarded. In India, some of the PSU stocks were not governed very well, were not managed very well because private sector was killing those companies. So that in a sense now seems to be changing. So the most underappreciated and the most ignored and the most not talked about trade is the comeback in some of the PSUs, a variety of PSUs. Key metals asset, railways, defense, electronic manufacturing, some by design, some by government in terms of giving them a duty moat, and some by governance change.
Yeah, the returns really speak for themselves, especially within the entire defense and railway pocket. That aside, let's connect with our chartists, find out their views on the market. C.A. Rudramurthy is with us, and we've also got with us Naresh Merani. Morning, gentlemen, and let me begin with you then, Naresh, as to what the outlook is on the frontline index right now. Do you believe that we were likely to continue in this range, circle around the 19,550 mark for some more time?
That is what it looks like. We are creating a, upper end around 19,650, 700 as of now. And on the lower end, 19,300, 350. So that's a 400 pointer range we have on the market as of now. Till the time we don't go beyond this range, a trending move looks difficult. And this is the period of time where you want to play more defensive, be stock specific, cut down on the size you trade till the time we don't get into a fresh trend, because there could be a one day up, one day down scenario, which could continue for at least a few more sessions. Take a fresh view once we cross beyond this range. And once this range is crossed, you could get a 400, 600 pointer move over the next few sessions. So for now, stuck in the range, right in the middle of it.
Right, stuck in the middle of a range. Let's find out what Rudra makes. And Rudra, in particular, given the RBI policy, the way we saw the Nifty Bank move now below the 50 daily moving average, what's your reading on the charts?
See, even for me, I fully agree with Nuresh's view, where I see some time-wise consolidation to happen in market. Market will be in this range of 19,300, 400 on the lower side on Nifty, and then on the upside, it will be around that 19,600 to 19,800. And on Bank Nifty, if you have to see the levels, it is at around 44,500 and 45,300 on the upside. So this range, both Nifty as well as Bank Nifty, will spend some time. And I feel the breakout should happen on the upside rather than on the downside. But having moved so fast, so swiftly, both on Nifty and Bank Nifty, we are seeing some time-wise consolidation, and market will be very, very stock specific. And PM giving news of PSU to do very good. In fact, PSU banks, especially SBI and even Canara Bank, looks to me very, very attractive. But you have very stock specific moves which will happen in the coming days.
All right, let's get stock specific then. And what is it that's on your radar, Rudra?
Yeah, I'm picking the top PSU bank, that is SBI. No doubt post results, yes, it made a move on the downside for very short term, but very strong support is there at 570. Look at the great risk reward you have buying SBI now. As a trader, if I'm buying at current market price, I just have 1% to lose. I'm keeping a tight stop loss at around 568 because I feel 570 support will not get broken on the short term. So keeping that 568 stop loss, looking at a target of 590. So that is a 25 rupee return from current level with a 5 rupee stop loss, 1:5 kind of a risk reward. Second stock which I like on chart is GAIL. Again, these are positional buys available in future. One can roll over and carry positions on the long side irrespective of market movement. And for me, GAIL also at current market price is very attractive. Keeping a tight stop loss of 114, I am looking at target of 130. Again, from current market price, it's a 1:5 kind of a risk reward. Even with 30-40% kind of an accuracy, you will make big money when you have this kind of a risk reward. So both on the buy side, SBI as well as GAIL.
Okay, and let's find out what's on Nuresh's radar. You've got Rudra betting on GAIL and SBI. Nuresh, what's your preference?
So first is a buy on IndusInd Bank. The stock has continued in a higher top, higher bottom formation. And over the last 3 sessions has clearly been showing strength even when the Bank Nifty has been correcting. And the stock is now in a, say, a 1%, 1.5% away from the recent 52-week highs. A flag breakout confirmed yesterday above 1430 levels. So a clear-cut leadership move coming in for IndusInd Bank. This could at least take it to 1550 to start with, could surprise on the way towards 1800 plus in the medium term. So like the stock, expect more momentum once it sustains 1450 levels. So buy at current levels as well as on dips with a stop loss at 1370. Second is a buy on ONGC. Now, this is a structural call in terms of the medium to long term. If you look at the longer term charts, 180 to 190 has been a major resistance. The stock topped out around 180, 190 when crude hit $130 in 2022. Post that it saw a sharp correction, made a recovery, again saw a correction from 155, 160 when windfall taxes got announced. Now, we are back to that 180 mark, which is very close to a multi-year breakout as well. On a dividend adjusted basis, it is just 10% away from an all-time high. Looks very similar to what happened with the rest of public sector enterprises. Should be a major re-rating candidate going forward. A short-term target price of 200, longer term would be much, much higher. Stop loss at 170.
Bullish call coming in from Naresh and ONGC. He's been pretty gung-ho on the stock off late. Almost on a daily basis, it's one amongst his top picks. But let's talk stocks. And to talk about all of that, Anisha joins in the studio right now. And Anisha, it's got to be Zee, right? After all decks got cleared for the merger. I mean, now the only overhang, of course, is the SEBI hearing on the CEO's post. But what a move. And why not?
Yeah, what a move yesterday. As we were discussing yesterday, it was a Bollywood movie of sorts, had its ups and downs, total turns and twists, tears and, happiness. But at least it ended on a happy note, and we were discussing whether there's going to be a sequel with that SEBI meeting or not. Let's see what transpires with respect to that. But at least the binary event is out, and the brokerages have come out very, very positive, as we were expecting. They're calling it a re-rating trigger for the counter going forward. But one needs to watch out of what the next events are likely to be. Now, in course of the process, Zee will now file its petition in ROC. After that, the stock will get delisted for some time and relist as the merged entity. So those are the next steps. The street is expecting it shall happen over the next 3 to 4 months. But the more important bit is that they're expecting that the merger will now go through, and the synergies is something that they're banking big on. Goldman Sachs, for instance, calls it a re-rating event. They are seeing strategic merit in the merger as well. They also say that transaction is helping to address the corporate governance concerns that were there earlier, and whatever discounts earlier the stock used to get because of corporate governance overhangs will now go away, given that Sony will now come as a majority holder with 50.86% stake. They're also saying that access to new capital will support the content acquisition. But for now, they're maintaining neutral for this deal to really fructify. We also have a note coming in from CLSA, wherein they are saying that Zee's CEO's case awaits hearing in the SEBI, but they retain the buy. They have a target price of 300, very close to the current market price, and MK had to raise the target price to 335. Nikunj, this re-rating trigger finally out. Case now to look at Zee constructively, because earlier it was very volatile.
See, you've covered most of the points. Now, if the merger goes through, and when the merger initially was announced, it was at a much higher price than what the current underlying price is. And if the merger goes through at that current price, obviously there is an interplay and arbitrage which is at play. This merger in a sense was centered around the fact that this will create a media behemoth. But a lot has changed in the media sector after that, both globally and locally, both in terms of what some of the global media companies have decided as in policy. So when the merger was announced, the terrain was different, and now the terrain I think is very, very different. So that is something which needs to be considered. What really happens to the CEO post, like Anisha pointed out? I mean, will the merger go through in what it was proposed, or there could be a change of guard? Nobody knows. And see, the stock has seen a run up. The challenge with Zee as a stock is that the free float I think is about 95%, because the promoter family in this case, they own about close to 5%. If they own close to 5%, a stock which is an F&O stock which is highly volatile, I guess it would be difficult to put your finger on the near-term stock movement. So if the merger goes through as per the original indication, I guess the upside is still there. If the sequel goes differently than what happens, than what was announced yesterday, then the volatility would be there. But for me, I think the contours of the terrain has changed when the merger was announced versus what the merger is for everybody, for the entire media industry per se, and that is something which needs to be considered.
Yeah, that NCLT outcome being described as a silver lining for NCLT.
But today the stock is in F&O band, so you're not going to see as dizzying a move as you did yesterday, wherein first it shot up 10%, from there it was at 15%, and finally on closing bell was over a 17% move. So expect a much muted move on the stock. Anisha, what next?
Well, today we are spoiled for choices. I mean, the amount of earnings that we have got right from a Biocon, LIC, but of course the big one from the auto space is Hero. So let's discuss that one at length as well. Because overall it was a mixed set. It was slightly on the muted side, because when you compare to the peers, there was no fireworks in the counter per se in terms of the earnings. But having said that, let me run you through the numbers. The revenue on a year-on-year basis jumped by just 4%. The positive was actually on the margin front, which came in at 13.8% as compared to street estimates of around 13.2 thereabouts. And last year, this number was closer to 11%. So there's a definite uptick as far as margins is concerned. Profitability, however, was a miss on reported basis, because there was a one-off in the numbers on account of VRS of around 160 crore. So that impacted the bottom line. Interesting things to note in the numbers is the realization has actually dropped on a year-on-year basis and even sequential basis. So why is that? Secondly, there seems to be a loss at EV vehicle to the tune of 176,000 per unit. So that's something that Street wants more details about. And the most important bit was, Nikunj, that earlier they had talked about what a double-digit growth in FY24. This time when the commentary came out in the press release, there was no mention of double-digit growth. They did say that second half of the year is going to be interesting, but given
given the kind of, better numbers that we have seen from the likes of Aisha, do you think this one will go down as a bit of a dud?
See, numbers are not impressive. And the entire two-wheeler market per se, I think both for the ICE engine and also for the EV in the two-wheeler space, it's just going through some adjustment issues. If there is one sector which in a sense has disappointed, I think it's the entire two-wheeler space. Now you could blame it on the rural recovery, you could blame it on the competition or the fact that this is a category which is superly penetrated. Whatever may be the underlying reason, now whether it is Hero MotoCorp or Bajaj Auto, the domestic market is not really picking up. Now Hero MotoCorp frankly has not really gone beyond their coordinating, which is that they are a dominant player in the entry-level market share, which is getting challenged by TVS and which is now getting challenged by Bajaj clearly. So what has Hero done? Well, they've tried to reboot a strategy in terms of getting into the premium biking segment, and they're looking at reworking the entire export distribution. In my book, they both are work in progress right now. Even if Hero is able to displace Aisha's monopoly in the premium biking segment, for Hero's balance sheet, it's not going to be something which is going to move the needle immediately. So while the whole proposition of it's a contra buy, it's a value buy, it is cheap, it is zero debt company, gives a lot of dividend, throws a lot of cash. I think all that proposition was there last year also, and the year before that, and the year before that. The problem with Hero MotoCorp is that where is growth? And what are they really doing to live up to the great brand Hero? And frankly, that is where I think the magic from the Hero stable is missing. It's a magical brand. It is one of the most powerful brands. But the magic right now is, I think, missing.
It's not at work, yeah.
Yeah, but the magic which is at work for one of the brands is ITC, right? That brand has been just going strength to strength. Of course, even if you look at the various categories, they are number one in most of the categories as well. And the reason why we are talking about ITC specifically today is the fact that the company is going to hold its AGM today. Of course, it will start around 10:30 a.m. The reason why we are excited about it is also that there will be some fresh comments that might come as far as the hotel demerger is concerned. Of course, the board meeting is on August 14th, wherein more details will come out. But nonetheless, Nikunj, ITC, that has been a solid value creator and wealth creator for the last many years. And in your discussions as well, it came out, right, that FMCG is going to be a further re-rating candidate as well.
See, why is the AGM important? A, it's a performing stock. B, it's a stock where the demerger has been announced. C, it's a company where you need to look at the way how things are changing in terms of the non-tobacco business. Now, whether it is the combination of the FMCG business or demand coming back in the entire paperboard business. I think from ITC, you got to now hear two things. What's next? What's next for the non-core business of ITC? And once the hotel business is out of the balance sheet, which are the new businesses which they are looking at seeding, and which are the businesses they are looking at scaling? What happens to the tobacco business, especially given that given that you've got this entire smuggled cigarette problem, and what happens there? So AGMs are normally about a vision statement. AGMs are normally all about where the company wants to go. But the context of this AGM, I think, is important simply because of demerger, the recent outperformance, and what's next for ITC, given that now the leadership in the FMCG business, I think, really seems to be there. I mean, when Sanjiv Puri took over, things were very different for ITC. The FMCG business did not scale up. Hotel and paper business was going through a downturn, and the tobacco business, in a sense, was like a flat curve. Now the terrain is very different. Tobacco business is stable and growing. You got the hotel business, it is in a J curve. The paper business and also essentially their non-core business is everything is filing full cylinders. So that, I think, is the context for this AGM, where you will get some clarity, some indication as to which are the new businesses they are scaling up, which are the new businesses they are incubating, and going forward, what is the plan or the real plan for the FMCG business.
And as you said, it has been a performing stock as well. So we'll be keeping this one close on our radar. Thanks very much, Anisha, for giving us those details. And it's interesting that you had that very cool interview as well on Mega MNCs. And that's none other with the global market leader in the beverage industry, CocaCola. So we had the top brass, the management debunked the misconception surrounding the alleged cancer-causing properties of aspartame, the road ahead, and their expansion plans in India. Let's listen in.
The ingredient in question is aspartame, which is there in Diet Coke. it does not exist in Coke Zero. So that's one thing. Aspartame, very interestingly, is one of the world's most researched food ingredient. So these concerns about aspartame is not a new one. It's been going on for the last 30 years. And across all the continents, most universities and most labs have done extremely detailed researches on this ingredient. And every time it has come out as completely safe. That's one. Secondly, if you actually go through the report of what came out, it doesn't say that aspartame causes cancer. It essentially says that if you have, say, around 15 to 20 products with aspartame in one go, you are in the same risk level as, example, aloe vera, or red meat, or going to a barber shop. So if you actually go through the report, you have to get into the details. So absolutely, you should not worry about it. If you like your Diet Coke, like millions around the world do, just go and please continuing to have your Diet Coke.
Thanks for staying on with us. This is The Market. And yesterday, yes, the big Maharaja of the Skies got a mega makeover. The Tata Group-owned Air India unveiled their new look, the new branding. And Air India's CEO said that the logo signifies limitless possibilities and confidence. Meanwhile, talking at the event, N. Chandra said that for the Tata Group, Air India is a passion and a big national mission. Take a look.
New Air India, the vision we have for the airline is also in the backdrop of a new resurgent India, where the aspirations of everyone is limitless. The new logo that you see here today, the Vista, signified by that historically used window, the golden window, the peak of the golden window signifies limitless possibilities, progressiveness, confidence, and all of that. We have been at work during the last 15 months or so on this journey, because our vision is to make this airline world-class in terms of modernity, safety, technologically most advanced, exceptional in terms of customer service, and an experience that Air India used to be known for.
Okay, that's N. Chandra talking about Air India's Maha Makeover. Let's shift our focus back to earnings. And joining me right now, Tarak Patel, the MD at Jim M. Fodler, joining in on the show right now. Tarak, hi, morning. Good to have you. And I can see you've posted a decent revenue growth this quarter. Which segment and geographies drove it?
So as you can see, we've seen significant improvement year on year as well as quarter on quarter in terms of revenue growth. This revenue growth has really been driven by our international business due to strong execution, pricing improvement, and also, there has been obviously improvement also in terms of the EBITDA margins, right? This was mainly due to lower energy costs in Europe now, so we are seeing some benefits as well. The India business has been stable. Obviously, there has been a slight slowdown in India due to the chemical the industry, which is obviously going through a little bit of a tough patch. But overall, I think it's a very strong performance. We start the year on a strong note, and we are on track to meet our FY25 guidance.
All right, that's good to know. But your order intake has seen a bit of a slowdown, and that's largely on account of the chemical segment. What are the kind of conversations you're having with the clients? When do you anticipate a recovery?
So yeah, exactly. That's what we're trying to, and we have been speaking to a lot of our clients here in India. So there's definitely a slowdown at the moment. This is obviously caused by overstocking in supply chains across the world. There has been some pricing pressure from China as well, and the commodity prices have been going up and down, right? Overall, even though there is this challenge in the short term, I think most companies who planned investments will continue with their investments. I don't think there's any change in the investment plan. Some of the, I guess, the decision making, which were maybe a little bit faster, maybe a few months ago, has slowed down a little bit. But like you rightly said, I think end of this financial year, maybe Q4 of this year, you will see some recovery. And then we also expect pharmaceuticals to kind of pick up as well, right? And from our perspective, we have a strong backlog. Our backlog is close to about 2,000 crores. So that gives us about 8 months of visibility in the international business, 5.5, 6 months here in India. We are definitely more aggressive in the market as well, and being the I guess the best player in the market, it's obviously easier for us to win business. So I think that's something that over the next few months we will be trying to kind of increase and improve our backlog.
Right. Steel constitutes, Tarak, major part of your raw material, right? With volatility now in the prices, how do you see the margin trajectory pan out for you? And does the FY24 guidance of 14% stay intact?
So we're working on a lot of internal measures. Like I mentioned to you, the market is a bit slow, so the competitive intensity will increase. Like I said before, also, we are the market leader. We are the technology leader. So customers will want to go with us. So we do definitely have a preference there. Having said that, there will be some pricing pressure, but we hope to make that up with some internal kind of efficiency improvements that we're looking at, cost controls as well. And as you know, we've kind of diversified as well. Over the last maybe 3 to 4 years, we've added on bolt-on acquisitions. We've diversified the product, the portfolio. So we are not only dependent on chemical and pharmaceuticals, right? So we have a much wider kind of profile now. And lastly, I think our services business, very highly profitable, very sticky business, accounts for nearly 35% of our international revenues, right? So that business will continue to grow, and that will give us some buffer when it comes to margins.
Okay, Tarak, what's the outlook on the synergies from Bolt on the acquisition by the company in FY23? Are there any acquisitions in the pipeline?
Yeah, so the synergies will definitely continue to add up. I think that's something that is an ongoing process. We completed the acquisition of Mixel a few months ago. That integration is definitely ongoing. We are looking at mixing as a very important part of our growth strategy. There's one more acquisition that we are looking at in the North American region. We expect that to kind of close in the short term. Not a very large the acquisition, but in terms of manufacturing footprint, will give us a presence in North America, and that will kind of kind of build a global play for us in the mixing business.
Right. Debt level for you also has risen from what we saw in FY21. What is the current debt stand at, and what are the plans to reduce it?
So I believe that debt levels are very much in control. The last time the debt went up was when we completed the acquisition of the 46% stake of the international business. That was maybe last year at some point. Since then, we've been repaying debt consistently. We believe that by the end of FY25, our debt levels should be down to very low levels. Even now, today, we are very comfortable. We're less than, I think, 1 time. So I think I'm not too kind of worried about the debt levels. And even the acquisitions that we are doing and we have done are through internal accruals, right? So we do generate cash, and over the next few quarters, few years, we will definitely repay this down. All
right. Thanks so much for taking time out and joining in. Tarak, good to have you on board. So Sandeep Sabharwal is with us on the show to discuss his outlook on the markets and more. Sandeep, hi there. Good to have you on board. Let's start up by discussing the outlook on Zee. Clearly, one of the big overhangs seem to be out of the way. Brokerages upping the target price, calling it a re-rating candidate. Do you believe that now the road ahead looks comparatively smoother for the ever volatile Zee?
So, in terms of the uncertainty, I think that goes away. So, I would think that further legal challenges will be tough for the merger process. The issue now, investors who want to invest in this company afresh have to grapple with are that do you want to be in a business which seems to be on a secular decline? I think the general entertainment genre, as satellite TV goes or as TV channels goes, I think it's on a decline. They will continuously lose advertisement share as well as pay revenues, and the costs will still remain high. They'll have to spend on more on the OTT front, which would be not profitable in the near term. So I think it's a tough business. It's not an easy business. So I would believe that the rally induced by this merger is a good exit opportunity for those who have been holding on to the stock for a long time.
Right. Although on Zee, CLSA's note, they've put a target price of 300 on Zee, saying that Zee will make a filing now with ROC, shares will be delisted and merged with the company and then again be relisted. They're saying that Sony is going to be holding the majority, 50.86% of the merged company, and Zee founders are going to hold a little under 4%, and then the NCLT in an unconditional verbal order has approved the merger with Sony, and that's a big trigger according to them. Page Industries, that's the other one which is in focus. The company has remained cautious on calling for a pickup actually. They cited continued volatility. There were some signs of demand, remember, some green shoots in the first quarter. Having said that, they're pretty confident of that 19 to 21% margin ahead as focus remains on cost control for them. It's an underperform from Macquarie on Page Industries, a target price of 30,000. So that indicates a significant downside from the current market price, that of 40,000 plus levels. Sandeep, you've been tracking Page for a while now. What did you make of the earnings trajectory that we've seen, not just the Q1 performance though?
So I think the state of the consumer sort of consumption basket is similar across the board. There have been some small pockets of positivity, but overall consumer sentiments are down, and that's reflected in the performance of Page also. Now, Page had set itself up for a much higher growth, which has not played out, and that's the reason it took a big hit last quarter in its profitability. We've seen some revival now. Obviously, input cost pressures are much lower for them, and that's helping them. But demand revival still seems down the line, and inventories in the system seem to be high. It's not a cheap stock. Like at I think at the current projections, the valuation should still be around 70 times earnings. So there's no case for buying at these prices. If stock corrects and we then move near to the festival season and we see better prices, then we can consider. At this price, I wouldn't be a buyer.
Okay, that's the view coming in on Page Industries. But let's move on then. And stocks on the editor's radar today, we'll be discussing the Nifty Bank and in comparison to the way the Nifty has performed. And Nikunj, what have been the key observations?
See, the banking sector, even we talked about, is the leadership sector. It is the go-to sector. It is a sector where things, in a sense, have been really dramatic in terms of an up move. A little bit of price action for this year tells you that the Bank Nifty actually has not really been a serious outperformer. While markets may be at an all-time high, we may have heard the ring of almost 20,000 on the Nifty. The Bank Nifty actually has not been it's been a leader. It's been on a comeback trail. Numbers are strong, but it's not really done a wow kind of outperformance. That's how things are stacked up for the Bank Nifty. Now let's look at yesterday's news, and that's why I think we've got the Bank Nifty here. There was an apprehension in the market that Reserve Bank of India the new measures of Reserve Bank of India will have a sizable impact on the liquidity, and it will have a sizable impact on the net interest margins. But the fine print, what most of the brokerages are indicating, and this was our channel view also yesterday, that the impact actually is going to be teeny mini, very small. This is something where the Reserve Bank of India is just getting their guns ready. They are not firing the salvo in order to bring inflation down, which means that the reaction which was there in some of the banking stocks and especially PSU stocks post the RBI policy, I think was somewhere unwarranted. The challenge for some of the PSU banks now is that the NIMs are coming under pressure irrespective because of cost of capital is going higher. So that is a separate issue. But based on yesterday's RBI policy, the sell-off in the bank nifty, especially PSU banks, I think was slightly unwarranted.
Okay, and for the Nifty Bank Index as well, below its 50 DMA. There you have it, Aisha, the view on the editor's radar, the banks.
Yeah, absolutely. That's the case coming in for banks. Sandeep, wanted to get your perspective, if on this. In fact, the announcement from the governor yesterday on the ICRR, a knee-jerk reaction for the overall market and banks in specific. But then it's only temporary in nature. It's going to be revised and revisited on September 8th.
Yeah, it is. So but then I think we need to track inflation dynamics, and it's not sure. We're not sure that RBI will reverse it or continue with it. What it does to this on this move. Now, the bank names have already been under pressure because of tightening liquidity and them having to go to more term deposits to raise money. Now, this will add to the pressure. Now, overall, I think the issue with the banking sector, it's like with IT last year, is that it's a very over-owned sector today because IT was not doing well. IT banking tend to be the fancied sector. So most traders and investors have loaded up hugely into the banking stocks. And that creates a scenario for underperformance in the near term. So I think we could see still some underperformance from the banking sector over the next few weeks.
What do you make of the fact that the Prime Minister himself yesterday has given a stock-specific tip? PSU pe dawa bolo. Dav lagao.
Both are two different things. Dawa bolo ya dav lagao.
And with specific names, HAL and LIC. Stock-specific tip.
Yeah, I don't know what created. I don't know why that was done, but I think there are two very different stories. HAL is on a secular growth path with stronger outlook. LIC obviously is on a secular decline with losing market share. So I think there are two ends of the spectrum.
The other number which I think is worth revisiting actually would be Hero MotoCorp. Is the magic from Hero MotoCorp missing? It's India's, it's like a powerful brand, high impact brand, a brand which has seen the peaks and the turfs and the twists and the turns. Yet Hero MotoCorp finally, it is still struggling to get its mojo back, Sandeep.
Yeah, Hero MotoCorp, unfortunately, is a company where the management over-promises and under-delivers. It's been happening for the last so many quarters. In fact, you go and look at their quarterly commentary after every result. They say there is going to be huge revival, volumes are going to revive from the next month itself, whereas the ground situation does not indicate that. And I think that has created dissonance between the company and what the investors think, along with the other controversies going around the company. So I think there's no great story out there. Now this Harley-Davidson booking news is there. Let's see how that plays out. That will be a small part of their overall business.
Okay.
Couple of other names which are going to be in focus this morning. Of course, you may want to look out for a follow-through on Zee, although remember the stock is in F&O band today. So you're not going to see as teasing a move as you saw yesterday when the NCLT decision on the merger go-ahead actually came about. But Naresh, you also were bullish on Zee, and I recall you had recommended booking profits around the 280, 281 odd level. What today?
So the view remains same. If we go back to the previous time, say the first announcement came in, the stock had gone up from 180 to almost 280, 300 levels. Then there was a follow-up announcement back in 2021, and the stock had made a peak at 350, 380 levels, but did not stay there for long. We saw a dip all the way back to 220. Then again, there was a gap up move. We went to 300 levels. So I believe 300 would be a tough order to cross for the stock. That's been the high for the last 1.5 years, and also the high on the day the first announcement came in. So the viewers at 300, one is better off taking some profits off the table or fully. The trade has played out. Yesterday was a big volume day. So if somebody has a view that the stock can go beyond 380, that is the only point of time where you can look at the trade. But I think at 300, the stock seems done for now.
Sandeep, on one hand there's Page, on the other there's Trent when you talk about branded retail, right? Excellent set of numbers, once again, upgrades kicking in, irrespective of the expensive valuations. I mean, Nuvama has got a target price of 21.19. MS has also raised its target and also the FY24 to 26 estimates by a good 3 to 6%. Continues to be a buy for the ones looking at a long-term investment, irrespective of the valuations?
So I think for those who are holding, there's no reason to sell. For those who want to buy, I think the stock is very expensive. So for the stock to go do very well from here, it needs huge earnings growth to happen, which is something which looks tough in the near term. But it's been one of the exceptional performers on the retail side, where it's been able to defy the slowdown which other retailers have seen and continue to grow. I think that holds it in good stead, and that's helping the stock hold up to at these levels. But I think for fresh entry people, I think some patience is required.
Just look at, we talk about Bajaj Finance, HDFC Bank every day. I'm stunned with some of the stocks and what kind of multi-bagger returns they've given. We spoke about Tube Investments yesterday. 10 years ago, Tube Investments, and I was actually rubbing my eyes to see where Tube Investment was. I mean, when I started my career as a television commentator, Tube Investment was there. It was this holding company of the Murugappa group. But last 10 years, I mean, they've hit out of the park. 130 rupee stock. Yeah. 130 rupee stock, Aisha. I mean, you got to just take you really got to rub your eyes. Actually, I wanted to do that so that now I'm not reading the screen wrong. And 130 rupee stock has become 3,000 plus. Similarly, Trent, it may not be a same kind of a return, but in terms of an outperformance, what Trent has given you in last 10 years, there you go. 91 rupees, 100 rupees has gone to 2,000. It is 20x. Tube Investment, yeah. And these are like the most obvious businesses which touch your daily life. Escorts, a similar kind of a return. So it's not that, okay, HDFC Bank and Bajaj Finance and Titans have done well. Last 10 years have been good if you've been really working hard and, identifying some stocks. So Sandeep.
Let's work hard.
Let's work hard. Where are you working hard? What are you picking? 10 years from now, I don't know when you and me would be there, but stock markets would be there. But if you have to pick a stock for next 10 years, which could add zeros, not on the left-hand side, but on the right-hand side, which one would that be? I'm specifying the direction of the zero. People get confused these days when I ask this question.
See, it's very tough to make all these predictions, and I stopped doing it a long time back, because in the quest for trying to buy into companies which will go 10 times, sometimes you lose money. So the aim is to identify companies which can do well, and once they do well, they surprise you on the upside, and when they surprise you on the upside, they generate huge returns. So I think that's happened in a few companies in the recent past. I can remember like companies like Wonderla Holidays, which we bought, or Titagar Wagons, etc. I think some of them, when there's a paradigm change in the growth prospects of the companies, then suddenly the valuations move up, and along with earnings growth and valuation up move, then stocks give return. So I think it's tough to make such prediction what will do well over 10 years. I think we have to just try and identify better companies which we think will do well.
Shivangi Sarda also joins us now. Shivangi, good morning. Thank you for joining us. Hope you enjoyed your evening that day when we happened to meet each other.
Yes, good morning, Nikunj. I did enjoy my day a lot. It was lovely meeting you as well. So talking about the market outlook, we've seen that Nifty is under a little bit pressure but again, it is trading in a previous raise range, so it formed an inside bar candle yesterday. Talking about Bank Nifty, there is more underperformance over here. So our take on the indices would be Nifty would be trading in a range bound manner, but Bank Nifty can be utilized sell on bounce. So any little upside would be utilized as a selling opportunity. So watching out for 44,750 as a resistance levels immediately for a downside move towards 44,000 zones.
Okay, that's the view coming in on the frontline index itself. But let's also get in a take then, Sandeep, as to what your entire outlook is on the likes of a PVR as well, PVR Inox, and the space as a whole. Given the fact that now it seems that content that's a lot more favorable is working out, we're also seeing quite a few big films to have hit the cinemas.
Aman, it's so strange that things have totally reversed over 3 months. Like from where a scenario where nothing could go right to where everything is going right for them. I think a movie after movie is doing well. New movies are getting accepted better, and we are seeing much stronger response from. And to that extent, that debunks the entire theory that OTT has taken over and people will never go out and watch movies. So I think it's all a matter of content, etc. And PVR Rhinos, I think they're in a very good space because of their dominance in the Indian market today. I would still think that the stock is cheap relative to longer term prospects. So all of us have realized that there's going to be cyclicality in performance. It's not going to be secular growth. And to that extent, the valuations we would like to give would come down slightly. But at these prices, there still seems to be value.
You have that photo, Nikunj, Rajnikant's jailer clearly hitting cinemas, and you've got some stellar fans in S. Jagdisha and Sridhar Sivaram, who was in our studios just the other day. Are you going to be following suit very soon?
No. I'll tell you what, I was just looking at it, and for those who don't recollect, Sridhar Sivaram we know, Srini we know, but the man in the center is actually Shashi Jagdishan. Now, if you frankly ask a stock market guy, he's the real Rajnikant in terms of creating market wealth. So in Bombay, he's the real Rajnikant in terms of a fan and the franchise, what Aditya Puri and Shashi have actually created. Yeah. But yeah, I mean, Rajnikant movies need no introduction in terms of the footfall, in terms of an action, in terms of an vibe, in terms of the whole, the whole setup actually changes when these movies are released.
Yeah. And I think the Rajnikant of stock markets would be what? Bajaj Finance today?
Well, a lot of them. I mean, just think about it. Which is one company which, in a sense, has consistently delivered. And I think, like actors, you keep on changing your skin, you keep on changing your role, you keep on, adapting to what the script is. I think that's Reliance for me, and I'll tell you why. From a company which was a polyester maker, moved into refining, then moved into telecom, came out of telecom, moved back into retail, moved into telecom, moving into new energy now, split, giving you geo services. So frankly, I mean, in terms of longevity, that is what great actors are.
But it's more about blockbuster returns, because I guess that's what Rajni is known for. First day itself,
consistent outperformance. Okay. Consistent outperformance is what I would look at. See, the wealth what Reliance has created, if you really look at it, I think has been, it's just that Reliance was a discovered idea in 1995. In 2005, in 2020, and it will remain like a discovered idea. Yeah. So mega stars are the ones who always continue to
always shine.
Always shine. I think
Let's
that's
find out what
Sandeep
thinks. Who would be the Rajnikant of the market, Sandeep, according to you?
It's again the same question.
No, not future, current. Not future, current.
Who is the Rajnikant?
Yeah.
Think. We have all the time.
Nikunj thinks it's Reliance, Sandeep. I don't know if you agree or disagree.
No, not on. I wouldn't agree on Reliance, because I think that's a stock which has created wealth for a lot of shareholders, but it's not something which I would say that it's a clean buy or it's always done well. I'll think over this Rajnikant front and get back to you.
Going for the movie?
Jailer?
No.
Not jailer.
I tell you, Sandeep will go for, oh my God, 2 Akshay Kumar's. I'm sure.
Yeah, my friend's been pinging me that, let's long
Yeah,
weekend, let's
I'll
go.
go.
Yeah, and the reviews are good, by the way, Sandeep.
Yeah, I saw that. That's what I'm planning.
But the
Yeah,
hit
same
this year globally has been Super Mario. It's not been Mission Impossible. The hit this year has been Super Mario, followed by Barbie. Never thought that was coming. And then you got somewhere in between Oppenheimer and Tom Cruise. Well, I love that franchise, but number 5 or number 6. Let's see what Rajnikant
Not
does.
Rajnikant.
Okay, let's change gears and let's go to something which is going to be of immense importance in terms of the market positioning. And Nuresh, I'm looking at the list of stocks which are in F&O ban, and the list has really expanded. Hindustan Copper, India Bull Housing, Balrampur Chini, Chambal Fertilizers, Manapuram Zee Granules. What does this mean? I mean, if the list of stocks in F&O ban, if they expand, what does that mean?
So it is more a structural problem in India where the market-wide position limits are pretty low. So 20% of the free float is the limit of market-wide positions. And given the way option trading has also increased, that adds to the open interest. And that is where you'll see all the smaller names go into the derivative band. So companies which have low market caps, which are part of the F&O segment, you don't see a ICICI Bank going into a derivative band as such. So what happens is because there is enough float and there is enough speculation, the stocks go into derivative band. The second part is you have arbitrage funds which are large in India, so that creates another problem. There is a consistent position always there in a lot of these names because they have the highest cash to future arbitrage given the volatility in the stock. So that may not be the case with the large cap. So a lot of arbitrage funds I've seen at times wherever there is momentum, some of the arbitrage funds have been 20 to 30% of the OI as such. So that's a structural problem. But secondly, whenever speculation increases, that is where this keeps on happening. So if you see consistent names like India Bull Housing is part of it, which is generally the most speculative name. Whenever there is a move in India Cements, it comes into it. You will see a Zee Limited. We saw RBL Bank stay there for a long time. So the fact is where there is over activity from the retail side as well as the HNI side, that is where it goes. So not a great thing to see 10-15 stocks in the F&O band. It generally indicates there is a lot of speculation going. So whenever it's gone to 15 names, it becomes a case where there is over speculation. As of now, we are not there yet. But yes, it's more a structural problem. Unlike the US where you can have OI greater than the number of shares available.
Got that. Sandeep, on that note, we'll let you go. Make sure to hurry and book that OMG2 tickets because seems like that's also going to go off the shelf pretty soon. HCL Technologies, by the way, that's the other stock in focus. Remember, they've bagged a deal worth about $2.1 billion from Verizon. And that is going to keep this stock in focus. In fact, hear out what the management had to say on the deal.
So I think, in like any large mega program, there are many elements which need to come together for everything to kick in. But really as we have communicated in the market, yes, it will start from November of 2023 and carry on from there onwards. So aligning it to our guidance is we are standing by the guidance which the HCL management has most recently provided. Now, again, that's from a pure guidance perspective. So at an overall level, the organization is standing by both the revenue and margin guidance most recently provided. But again, as you know, we are also very conscious of the quality of business that we are winning. So it is pretty much in those operating conditions that we have selected this.
Our process has been long, but at the same time we tried to accelerate as much as we could. We started building this deal about 9 months ago. Then we went out to the market, about 6 months ago, and then we went through the process and the selection process. As I said, definitely this is an important deal economically for us. But what really mattered the most is the ambition we have to drive superior services to our customers and to significantly grow, in the market of M&S through this partnership. The growth has been the main driver for this decision in Verizon.
And just to add, if I may, that for the size of this partnership, it actually was executed very fast. And that's truly the commitment that Verizon showed in this whole evaluation process.
All right, what are the pre-open rates this Friday morning? Absolutely lackluster, and looks like we're in for another day of consolidation. But let's find out those mid-cap strategies from our chartists. And Shivangi, take us through your top mid-cap call.
So first pick on my radar is Paytm. So we've seen that this stock has come out of its consolidation range on the weekly front, and it's made a base, and now it's again starting to move with a good buying interest seen at these levels. So it is a good risk reward trade right now. So recommending a buy here. So with a target price of near 900 levels and a stop near 840 zones. Now the second pick on radar is JSW Energy. Now there's a lot of tailwind from the entire sector, and which is going to aid this stock. We've seen that a lot of price volume surge has been seen in this entire week, especially from the last two sessions. And the stock has very well surpassed its resistance zones and holding well above it. So a good potential upside over here at these levels as well. So recommending a buy here with a target near 350 odd levels and a stop near 330 zones.
Naresh's top recommendations within the mid-cap space. Naresh, what are you nailing it down to?
So that would be a buy on Satin Credit Care. We are seeing good momentum across the space, and Satin Credit Care has broken out above that 185 mark, where it saw a huge amount of volumes, a lot of blocks got done, and slowly and steadily the stock has picked up trend. And now the stock is back above the pre-COVID prices, very close to those levels. So expecting this momentum to continue towards 260 in the short term, a stop loss to be kept at 210.
Right, okay. Bank Nifty, that's on the spotlight today. So let's hear out Nikunj's view on the same.
See, the banking sector, even we talked about, is the leadership sector. It is the go-to sector. It is a sector where things, in a sense, have been really dramatic in terms of an up move. A little bit of price action for this year tells you that the Bank Nifty actually has not really been a serious outperformer. While markets may be at an all-time high, we may have heard the ring of almost 20,000 on the Nifty. The Bank Nifty actually has not been it's been a leader. It's been on a comeback trail. Numbers are strong, but it's not really done a wow kind of outperformance. That's how things are stacked up for the Bank Nifty. Now let's look at yesterday's news, and that's why I think we've got the Bank Nifty here. There was an apprehension in the market that Reserve Bank of India the new measures of Reserve Bank of India will have a sizable impact on the liquidity, and it will have a sizable impact on the net interest margins. But the fine print, what most of the brokerages are indicating, and this was our channel view also yesterday, that the impact actually is going to be teeny-mini, very small. This is something where the Reserve Bank of India is just getting their guns ready. They are not firing the salvo in order to bring inflation down, which means that the reaction which was there in some of the banking stocks and especially PSU stocks post the RBI policy, I think was somewhere unwarranted. The challenge for some of the PSU banks now is that the NIMs are coming under pressure irrespective because of cost of capital is going higher. So that is a separate issue. But based on yesterday's RBI policy, the sell-off in the Bank Nifty, especially PSU banks, I think was slightly unwarranted.
Okay, let me get some index calls going on that note, and let's see what the consensus call is on the Nifty after that bit of a knee-jerk reaction and a dip down post the RBI policy announcement on the ICRR, although temporary in nature. So no trade coming in from Naresh. See, Rudramurthy says buy, and Shivangi is calling it a hold. For the Nifty Bank, again a no trade from Naresh. Rudra says it's a buy and it's a sell from Shivangi Sarda. So not pretty much a consensus there, at least on the Nifty Bank, which has been the weakest link in the market as of yesterday.